We are now 19 days away from the tax deadline. This next segment is for those of you who are putting yours off until the last minute.
Yeah, last year, almost 18 million taxpayers waited until the final week to submit their tax returns, but procrastinating can only lead to some mistakes, perhaps. Joining the last-minute tax filers to talk to you and us, Michael Masserant from the Retirement Education Foundation. Michael, so people put it off. Why? Because it's work, first of all.
I think it's just, no one wants to think about their taxes. It's not fun to do. You got to gather your documents. You got to go log on to all your accounts and plug all the numbers in. No one wants to do it. They put it off, and then on April 14th, they're up at 2 o'clock in the morning, pounding numbers into the computer and hoping they don't fat finger something.
Yeah, don't fat finger. Okay, so. How does that cost you if you put it off, other than, I mean, there are fees that come with a failure to file on time, I guess.
Yeah, well, some people, they put it off, and they have the best of intentions to file their taxes before the deadline, but then they get sick, they fall and hurt their tailbone, something might happen, and all of a sudden they're missing that deadline, and then you really do miss the deadline, and there are fees and penalties that come with that. So, number one, filing electronically is so much easier than filing by hand. I don't know many people who file by hand these days, but there are still some people out there, surprisingly, and really double checking your work. I mean, just adding 1 0 in a box somewhere could really skew some things and put up some red flags with the IRS. It's really important. And then, by April 15th, one thing that people forget about a lot is you're still able to contribute to your IRAs or your Roth IRAs for the prior year. So you can still make a 2024 contribution for your IRA or your Roth IRA by April 15th of this year for the 2024 contribution year.
Yeah, that's important.
Now, where do the extensions come into play? If there's no way you're going to get it done in time, then you do have other options.
You do. So if it's, April 10th, 12th, 13th, 15th, and you just can't get it done, file an extension. You can file an extension. It's not, people think that, well, if I file an extension, the IRS is going to think that I'm trying to hide something. They don't think that. They think that you're not ready, and that's okay. Now, the big key here is if you do owe money for your taxes, you have to make that payment. If you file the extension, you can't delay the payment. That's a big mistake we see a lot.
Well, what's the point of the extension if you have to make the payment?
The extension is at least you can put off doing the paperwork, and if you have more documents to gather, you have more time for the documents. But if you think you're going to owe something, you've got to make that payment.
And you do that through like the website, the Michigan website, as well as the federal IRS website.
Correct, absolutely.
Yeah. All right, Michael, I want to pick your brain about these tariffs because that's getting a lot of buzz here locally and, of course, across the country, across the world. Actually, auto tariffs supposed to kick in on April 2nd.
April 2nd, yeah.
How do you see this as a financial guy? What do you tell? Do you have people buzzing about it? Are they worried about these tariffs? Because it is a complicated economic situation.
It's really complicated. And this is one thing. So for the consumer, tariffs go into effect on April 2nd. There may be some dealerships that are increasing prices now because they know April 2nd's around the corner.
We talked to them. Some parts already, they're seeing spikes.
Absolutely. Yeah. And so the average new car, they're saying might increase roughly $10,000 in price if the producers pass on these cost hikes to the consumer. And then that might flow through to the used car economy, because if all of a sudden a new car is costing $10,000 more to purchase that car, people might go, I'll skip that, I'll go to the used car, and now everyone's flooding to used car purchases, and that increases the price of used cars.
And you could take that a step further still, and if you say, okay, I'm just going to keep the car I have and make repairs to it, I mean, garages and shops will then increase their costs, as well as just the overall cost of the part might be going up. So all of it happens.
It's all going, it'll all become more expensive. And this is one thing the administration has said. They're not trying to hide. They said, look, there's going to be some short-term pain here. Now, they believe the long-term benefit is worth it, and we'll see. But everyone is on the same page. This is going to cause some short-term pain.
And the theory is, correct me if I'm wrong, but you make it more expensive for foreign companies to do business basically here in our country, to send their goods to our country. But the importer has to pay the tariff. So the importer, the United States, is going to pass that fee onto the consumer.
The company importing it. So the car manufacturer importing that part from somewhere else, they don't want to absorb that 25% cost increase. They'll charge the next person down the line 25% more, and then that snowball keeps on going.
And it makes it appealing to set up shop in your own country to avoid these tariffs eventually.
That's the long-term goal, is to bring manufacturing back into the country and bring more jobs back here. And it's very complicated. It may work, it may not work. We'll see. But as everyone, like I said before, everyone's on the same page. It's going to cause some short-term pain here.
When does a short-term pain end? I'd like to know that.
Yeah, what do you mean by short-term? All right, Michael, thank you as always for your expertise. Where do people find you, especially for this tax help?
Yeah, so especially for tax, we have a lot of tax resources online, refedu.org.
There we go. Thanks, Michael.
Of course.